Well, good morning, everyone. Thomas Montgomery. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and support each of you. Please note we will not have training on Monday. The first Monday in October, we will not have training. But today we do have training, and what we're going to talk about is phase 3. Should be shown on your screen. We're going to discuss phase 3. This is very important for those of you that are branch offices, or even those of you considering opening a branch office. Before we get to phase 3, we probably should do a quick recap and make sure that we're all familiar with the 3 phases of client implementation. I was on the phone with one of our new branches this morning, and I did a little quiz, and he didn't know what those 3 phases are, and that's okay. That's my fault, not his. So today I need to make sure that you know, like the back of your hand, how we implement clients. There's a 3-phase process. So let's review all 3 briefly, and then we'll dig into phase 3, which is our topic for today. So you as a branch, the first thing that you want to do, of course, is build financial literacy, build awareness in the marketplace, obviously all that. But from a client perspective, the first thing that you do is you want to have a complete client packet. There are 4 elements, and this hasn't changed. There are 4 elements that go into a complete client packet, isn't there? There's the client agreement. Well, what does that mean? That's the agreement between your branch and your client. We're not part of that. It's between your branch, your client. When you signed up as a branch, we should have sent you a branch onboarding email. If you don't have that, let us know. And on that was a link to an editable Word document, the agreement template. So it's the client agreement. So you would take that, you'd edit it, put your information on it, change pricing if you want. You could even change other terms and conditions, get it set up in Adobe, DocuSign, whatever e-signature method you want, then you're open for business. So that's what we're talking about with the agreement of phase 1 of the client packet. The second element of phase 1 of the client packet is the payment. Who does the payment get paid to? Gets paid to you, the branch. You're paid up front. You're paid immediately. You're paid today by the client who signed your agreement. How much is the payment? I don't know. What does your agreement say? Your agreement tells the client how much that they owe you. You're going to collect that from the client. Now, we know there's really 2 scenarios. Either they could pay you in full for the refundable setup fee that's stated in your agreement, or they could pay a down payment of $250. With the $250 option, there is a sub-step here, not listed, that you'll need to help them get their financing set up. And there's a link. If you need that, let us know. But then there's a link that they sign, and that sets up with 0% interest the further payments. So in phase 1 client packet, 4 elements: the agreement, which we discussed, the payment. You're going to work with the client to develop their personal financial statement, PFS. We've had separate training on that, and help them complete their soft pull. This is the soft credit pull. Obviously, when I say soft pull, it means that there's no hard inquiries, doesn't impact their credit. Don't know what the soft pull link is that you need to use for your clients? Go back and look at your branch onboarding email, because not only did it have the agreement template we mentioned before, also has your soft pull link. Okay, so now we understand what phase 1 is. Before I move on, though, I want to make sure, and it's okay, anytime you have a question, ask it. Obviously, it needs to be relevant to the topic at hand. But does anyone have a question about phase 1? Because that's where it all starts. If you can't master phase 1, phases 2 and 3 are irrelevant. Now, let's say that the client wants $1 billion, or they want 100,000. Does that change phase 1? Nope. What if they're a for-profit or nonprofit? Does that change phase 1? No. What if they want to start a church? What if they want to start a whorehouse? Does that change phase 1? No. Phase 1 is standardized. It's the same for every client, obviously subject to the 2 options on payment. Okay, so everybody good on phase one? I believe so. Then comes phase two. We've had separate training on phase two. That's where we help your client get their first tranche of financing. We want phase two to happen within days of them enrolling. We want them to see results fast from a funding perspective. And so with that, you're going to be working with your funding coordinator. You've had separate training. You should be familiar with that. If not, let us know. But also, I sent each of you this invitation this morning, so you should have it. First tranche financing. Not everyone gets first tranche financing cash offers. Everyone will get at least some sort of financing offer, but we've had separate training. So that's phase two. So does phase two change based upon the client's goals? No. Does it matter if they want $1 billion or 100,000? Does it matter if they want real estate or equipment or working capital? Does it matter if they're for-profit, non-profit? No, none of that changes. Phase two and phase one, I guess it's easier to say phases one and two, are standardized. So what'll happen a lot of times, you'll have clients that will want to tell you their story. And you kind of get caught up, and then you might be calling me saying, well, what if the client wants this or wants that? It doesn't matter in the beginning. It will matter, obviously, but phases one and two are standardized. So we should know what that is, how that works. If not, watch the training and then let us know if it still doesn't make sense. We have to be able to master phases one and two. Now, let's move on to phase three. That happens to be our topic for today. Ultimately, that's the goal, is to help the clients raise a minimum of $100,000. And we do that by helping them become qualified enough, right? Because it doesn't matter how badly we want money or how badly we need money. It matters, do we qualify? So that's really what you and I are doing, is helping build financial literacy and helping them build their qualifications, their credibility, their 3 C's, right? So phase three takes us to our topic today. If any of this doesn't make sense, start by going back and watching the prior implementation training that we've provided you. Okay. All right. So phase three. Let's dig into phase three. We'll make this just a bit smaller. Okay. Now we're on phase three. Unlike phases one and two, phase three is not standardized. So what I said before is true. Phases one and two doesn't vary. It doesn't matter how much money they want, what they want it for. It's just standardized. Phase three, not the case. A couple of you have come forth, Brenda and Mustache, and a couple others have said, hey, can we get a specific training manual that shows from beginning to end? No, because while we have standardized phases one and two, and it's working really well, phase three will differ based upon the client's mitigating circumstances. There's not a standardized approach that everyone will follow to get their full amount of funding. It's not that simple. It has to be based upon their mitigating circumstances. How much money do they want? What are they going to use it for? What are their qualifications? But with that being said, but in all capital letters, maybe bold letters, but there are a standardized set of files that we need. And so once you have a client that has finished phases one and phase two, I want you to all be crystal clear what we do at the beginning of phase three. So what's my point? Phase three always starts the same. Oh, they're a brand new business. Oh, they've been around for 180 years. Doesn't matter. Phase three starts with a standardized approach of you, the branch, or someone on your team, collecting the 6 initial documents so we can start building out a loan package for them. So what are then those 6 items? Now, it's a little confusing. You say, well, Tom, there's only 4 bullets, but pay attention here. So we have 3 business bank statements, the 3 most recent months business bank statements. So what could go wrong with that? Oh, Tom, you don't understand. They don't have a business bank account yet. They need to get one, right? We're not going to be successful most of the time. There's never an always rule, but most of the time, Business lenders are going to require the business borrower to have a business bank account. So they need a business bank account. Now, what if they said, oh, they don't have you say they don't have a business yet? That's a different topic. Then, of course, they don't have a business bank account. Then we need to go help them set up a business, which we can help them with the startup program. But separate, business bank statements are needed. Oh, they've only had their business bank account open for 1 month or 2 months. They don't have 3 statements. Well, there's no surprise then. Then you provide what you have. So, just be reasonable. What we're looking for are business bank statements. And if available, we want the last 3 months. Make sense? Next, we want the client's business balance sheet. This is not the PFS. Don't confuse it with the PFS. The PFS shows assets and liabilities of the business owner. The balance sheet shows assets and liabilities of the business entity. See the difference? Oh, Tom, you don't understand they don't have a balance sheet. Well, then we need to talk about how to help them get one. And we've had separate trainings on that. The business needs to be set up credibly and look credibly if we're trying to get large amounts of business funding. So a balance sheet is going to be required in most, frankly, not all, but in most cases. And so this is good financial literacy. We've had a training on it. And frankly, either they can get an accountant, bookkeeper, CPA to do the books for them, if you will, or they can just simply get QuickBooks. We encouraged all of you to sign up as an affiliate with QuickBooks. So you'll have a link. So if a client doesn't have a balance sheet, you give them your QuickBooks link, you get paid $50 or $75, whatever it is. They get signed up with QuickBooks, and QuickBooks is an example of a financial accounting software package designed for small businesses that allows us to create a balance sheet and an income statement. Let's talk about objections. So you might come back and say, oh, Tom, you don't know what the fuck you're talking about. This is a brand new business. They don't have a balance sheet. Well, that's a problem. They need to have a balance sheet. No, Tom, you're a fool, Tom. They don't have anything on it. Why would we develop something that's all zeros? Well, wait a second. A balance sheet shows the business's assets and liabilities. What are examples of assets? Money in their business bank account. We just covered that they have to have a business bank account to be a credible business. So they have what, at least a penny? Do they have a penny in their business bank account? Oh, yeah, they have that. Well, that's an asset on the balance sheet. Everyone that enrolls in the credit and funding program, which is what we're talking about implementation of, we provide for free $10,000 of receivables. How much do they pay for that? It's free. What are receivables? An asset, technically a current asset. Where is the current asset reflected? On the balance sheet. So no, I'm not going to buy into this nonsense that, oh, the client doesn't have a balance sheet, it doesn't apply to them. Well, it very much applies to them if you and I are trying to get them ready for business funding. And we've already identified they have at least 2 assets. They may have more. Now, on the other side of the balance sheet are liabilities. Maybe they don't have any liabilities, but that's a good thing, right? So when we show the lender that the borrower doesn't have any other debt, that's a good thing. That's not a bad thing. So yes, we need a balance sheet on every business. If you need help with that, let us know. We've had a training on it, but we need a balance sheet. Third item is the income statement, sometimes called profit and loss, easily generated from QuickBooks. So remember, once we have QuickBooks, getting the balance sheet to run that report, 5 seconds, 7 seconds, way less than a minute. Same for the income statement, also called profit and loss. It's just another report out of QuickBooks, another 10 seconds. So now it's true if they're pre-revenue, they've not sold any services to anyone, they've not paid anything. Maybe they don't have anything on their income statement, but wait a second. If they opened a business bank account, most business bank accounts have fees, account fees. Maybe it's $15 a month or whatever it is. Well, that's an expense. So all of a sudden, maybe they do have something on their income statement because that is at least one expense they've incurred. Right? Maybe there's other expenses. Then a business plan. Whoa, Tom, where'd this come from? I didn't know they needed a business plan. Well, Not all sources of capital require a business plan, and different sources of capital have different requirements for a business plan. So this is variable, granted. But why would you and I need to make sure that the client has a business plan? Because we need to figure out what the heck they want the money for. How much money do they want, and what are they going to use it for? Called the uses of funds. That's a section of a business plan. Now, let's say that they don't have a business plan. Then what you can do is you can enroll them, if you would like, into the Access to Capital program. And that's where we provide the software, the same that we used when I worked at the SBA, and we actually develop a lender compliant business plan. We build out a loan package for them that has these elements plus others. So these are the 6 initial documents. There's 4 types of documents, but there's 3 of these. That's why there's only 4 bullets. Hopefully that makes sense. You're going to upload these documents into your Dropbox. Each of you who are a branch should have a branch Dropbox. If you don't, let us know and we'll get that set up. Our contact information's here. Often we provide that once you have your first client. So we provide it kind of in a just-in-time approach. But regardless, you either have or will get for free a Dropbox folder, and that's like our virtual file cabinet. And that's where you put client files. That's where you're going to upload the client's agreement. That's where you're going to upload the client's PFS. That's where you're going to upload these 6 initial documents. I was talking to Brenda this morning. Brenda's one of our top branches, and she's on the training this morning. Brenda wanted us to have this discussion, which it was needed. We needed to have it, of course. But the point that Brenda and I talked about is balancing transparency with the client with practicality. What do I mean by that? Think about the first day that you signed up for college and went the first day of class. What if on that first day of class, they sat you down? Let's say it's Ken. Ken's on our training this morning. He's one of our branches. So the first day of college for Ken was sat down and said, Ken, here's every textbook you're going to need for the next 4 years. Here's every assignment you're going to need to do for the next 4 years. Ken would probably stand up and walk out the door and say, forget this. So in some cases, it's better to dribble the information to the client as they need it. It's not a lack of transparency. It's just if you give people too much work too soon all at once, they're much more likely to quit. So I want you to know the 3 phases. I want you to know these 6 initial documents. But frankly, I don't recommend before you sign the client up that you hit him with all of this, because it's going to be like Ken, his first day of college, and you hit him with every textbook, every assignment for the next 4 years. It's probably too much at one time. So it doesn't mean that you're hiding anything from the client. It just, this doesn't matter until we've completed phase 1. And this doesn't matter until we've completed phase 2. But it is what's going to happen. Now, you might ask, okay, well, great, Tom. So if we get a client through phase 1 and we get them through phase 2, and then they're in phase 3, and I, as the branch, I've collected these 6 documents, then the client's ready for funding, right? They've got to be ready for funding. Well, maybe. I mean, we're going to look at the data. I could make different analogies. Let's say you and I are car mechanics. Until we look and do the diagnostics of the car to figure out if anything is broken, we don't know what to fix. So don't fall into the trap of, oh, yeah, once we've had this, they must be then immediately ready for $100,000 or $1 million or $1 billion. They might be, but we need the data set. Like when you go to the doctor, you don't walk in and the first conversation is, here's your diagnosis. First, they gather data. They check your temperature and your pulse and your weight and your blood pressure. You maybe have to go urinate in a cup for a screening. So we need data to create a funding plan. So I wanted you to understand that. So here are the 3 phases. Here is the standardized part that you can anticipate for phase 3. As a branch, we need to have weekly one-on-one calls. That's where we carefully and thoughtfully go through each client. Where are they at? What's their status? Are they happy? Are they en route to funding? If not, what do we need to do to take care of them? So you can be better prepared maybe now, and that was my fault, but now we've resolved it. You know what's coming up, right? So if you have a client signed up and we're having our one-on-one, if they've not completed phase one, we really don't need to discuss them yet. You need to complete phase one. Or if we're having our one-on-one and your client has not completed the first tranche financing process, where you completed the app, you got it to the funding coordinator put together funding offers, and then the client either accepted them or not, then we don't really need to be talking about it yet. That's what needs to be done, and that's what you interface with your funding coordinator. When the client is into phase three, you need to collect whatever is available of these documents. Then at that point, you and I are ready to roll up our sleeves and put together their funding plan, because the funding plan can't be created until we have baseline data, especially the elements of the business plan. What does the business do? How much money do they want? What are they going to use it for, and so forth. So in summary, it's important for the branch to collect a standardized set of business documents identified above, and then in our one-on-ones, we'll review those documents and create a client-specific funding plan. Our contact us information hasn't changed. Let me see what questions or comments you have, and then we'll wrap it up today. Adam's asking about doing the first tranche financing before the PFS. No, and I'm sorry if I said that. I'm sure it's my fault, Adam. We need to complete phase one, then we do phase two. If I said something that seemed inconsistent with that, I apologize. I'm sure it's my fault, but let's go in order. Phase one's done, then we do phase two, then we do phase three. Now, to that point, if they receive offers that they don't like, they don't have to accept them in phase two. Or if they don't receive any offers, that doesn't keep them, cash offers, that doesn't keep them from moving to phase three. So don't misinterpret that. I apologize, Adam, for any confusion. Brenda's good. Ken's good. Okay, yeah, and Sylvia brings up a good point. So there's other things going on here, and I kind of made reference. So the client will be receiving, once they've enrolled, the $10,000 of free assets. I made reference to that. That comes from Debt Sellers, a third-party company that facilitates that. So there's action going on here, and we've got the credit suite for improving credibility and so forth. So yeah, there's other elements going on, but this is what I needed to communicate to you today. Cedrin's asking about the business plan. So there's two approaches. Access to capital, which we had a recent training on. If you've not seen that, you'll want to go back and look at that. But if the client wants to enroll in access to capital, we've decided to just split that evenly with you. So the client would pay $2,500, and it's a refundable setup fee. You get half, we get half. So that's an available resource. They don't have to do that. But if they want the software and the support from us, they pay you $2,500, you get half, we get half, and then we go build a lender compliant business plan and loan package. That's above and beyond the credit and funding. Credit and funding is about building the credibility of the business owner. Access to capital and or the startup program is to build the credibility of the business. So don't confuse those. Khalif asked, are the receivables placed on the PFS? Could be. Normally we would put them on the balance sheet. The balance sheet. But you're right. The receivables could be either here or here, but normally put on the balance sheet. Okay, let's see what other questions we have. Sylvia asked, are the leads given have opted in for the contract? Well, so unrelated to what we're talking about, we have the client placement program. If you're not familiar with that, please watch the training. That's where we can transfer contracted clients to you, so you're ready to just start working with them. You don't have to sign them up. client placement program. You can look at our YouTube channel and see training on that. I've got to run for another appointment. If you have any other questions, let us know. No training on Monday. No training on Monday. We'll be back on Tuesday as usual. Thanks, everyone. Have a good day. Bye.